Hey everyone, John Henry here from School of Trade, and today we're going to be taking a look at the Extreme Reversal Candlestick Pattern. Now, this is a really powerful candlestick pattern that we can use to get into several different trades throughout the day, whether it's, the candlestick pattern by itself or if you're using it in conjunction with a different type of trading plan. Basically, the Extreme Reversal setup is something that we've all seen once or twice, where you've got just regular price action, all of a sudden this gigantic candle comes out of nowhere, and then price immediately starts fading right back off again. Same if we go to the other side of things, chopping around, huge down candle, and then just kind of meanders its way right back up again. Now, digging into the actual rules of it, the first bar of this pattern is 2 times larger than the average size of the candles in the look-back period. Now, the look-back period is something that you can specify in the indicator that we use that basically automates this part for you. So you don't have to worry about that, but you can do a look-back period of, whether you want to look back for the day, the week, it depends on the time frame that you're trading, but you want to make sure that it's at least 2 times larger than the average size of the candles in the look-back period. Now, the second part of this is the body of the first bar of the pattern should encompass more than 50% of the bar's total range, but not more than 85%, and that's key to what makes this pattern so strong. Essentially, you're looking at the body. Remember, you've got on a candlestick, you've got the body itself made by the square there, and then you've got the wicks that come off the tops and bottoms. You want to make sure that the body encompasses at least 50%, no more than 85% of this. That way you can really show some conviction. The example of the candles right here, it closes near the lows much more than 50, but still less than 85. So it shows some indecision at the bottom, but there's still a huge block inside of that. And then the next part's more for the programming side of things, but the second bar of the pattern opposes the first, meaning if it's a down candle, you want the next one, the opposing or the next candle in the pattern to be an up. Same with if you're looking at a bullish candle, you want the extreme reversal bullish candle rather, the next candle should be down. And then this part just kind of breaks into the programming side of things, so we don't have to worry about that. The key thing to this is just making sure that if the extreme reversal's down, the next candle's up, and that the body is the correct size in accordance to the look-back period. So that's going to be the kind of the background of the extreme reversal. So let's take a look at the chart and see what we can find in terms of some setups. Now, this is a chart just of gold today on a 5-minute chart. And we had actually one of the setups that triggered off this morning just after the open, a little bit before 9 o'clock. So looking at this, we had the extreme reversal, and this is the indicator that we use that plots this right on the chart for us. That way you don't have to go back and, figure out if that's actually 80% of the candle. You don't have to worry about that part. Basically, we use this so that you don't have to worry about wasting all of that time, but it also highlights it for us so we can see exactly what's going on. So we have the extreme reversal candle followed by an up candle. Now, in this case, they're both painted blue because the indicator, because both of them are required for the pattern. So it paints both of them the same color. But we had the extreme reversal candle, we move higher. We did base out a little bit, caught a little bit of chop in here, but shortly thereafter, we started getting a really strong rise back up again. So it's a very strong pattern. You can use this on a lot of different time frames. Again, this is as an example at 3:30 in the morning. We had an extreme reversal, push down, upward candle, catches a bounce higher. So, you can use this on any time frame that you want, pretty much wherever you want, whether it's the signal by itself, or if it's more of a pattern that's going to be something that you use in conjunction with something else. So if you're looking at, as an example, a supply and demand zone, somewhere up in this area here, and you get this extreme reversal bar coming into it, well, not only do you have the pattern itself, but you've also got an area that you've already been looking to sell short. So using that, we can start selling that back down again. So that's going to be the Extreme Reversal Candlestick Pattern. If you have any questions about it, feel free to send an email to School of Trade, and don't forget to check out our trial at schooloftrade.com. Have a good one.